Can you hear me, guys? No, I've just started. You're not late. I've just started. Okay. So I just saw the economic calendar. We have nothing great tomorrow. We had 8:30 unemployment claims report, and I'm looking at the markets for the first time this week. I mean, like for analysis purposes. So it's been a long time since I was active. I mean, it's been a week. So today I'm actually going to just tape read casually because when you're away from the markets for a significant amount of time, you lose the touch, you lose the you know familiarity. So it takes a little time to get familiar with price action. So this is the first time I've opened my charts. I'm going to now just uh, set up everything. Can you just confirm if audio visual both are good? Okay, thank you, thank you. So let's start. Good, good. Let's start. I'm going to go full screen now. Time is right now 9:37. It's 7 minutes past New York Stock Exchange open. So this is the first time we're looking at the chart. I'm looking at the chart. I don't know about you, but Hmm. let's go. So for the very first thing, I'm going to go to the dollar index, weekly chart. We're going to analyze everything again because so we have a just a second. We have a small little fair value gap here, a weekly fair value gap. So here, the high of it, you see the body. Okay, 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 okay. And low of it. We're going to outline it with horizontal rays because why not? Because it's a weekly chart, because whenever I have to outline a fair value gap or maybe something, a range, not I don't look at a range, but when we outline fair value gaps, we usually use a rectangle. But when you're looking at the weekly chart or the monthly or the daily even, You should do it with a horizontal ray. Why? Because it looks like a small range here, but when you go down to the lower time frames, like the 1 minute, it will be your whole 1 minute chart will be blue shaded. So on the higher time frames, it's preferred. I prefer to use horizontal rays. We also have this favela gap here, this weekly favela gap. Now, since it's away right now, I mean, it's coming towards it, but for now it's away. So our 1 minute chart will not be shaded. Whole chart will not be shaded. After it gets into this rectangle, it will be shaded. But for now, I can keep a rectangle here. Okay. I would like to go down to the daily now. So this is the weekly favela gap, but we have a much better one here, this daily favela gap. So I'm just going to monitor how price delivered. Okay, the bodies essentially were inside of it. Okay. So since it's the current price is away from it, I don't think we need it anymore. I mean, it's important, but since price is away from it, I'm not going to mark it on the chart. Hmm. Bias for dollar obviously looks bearish. Mhm. Now see, this favela gap right here, price went to the consequent encroachment of it, retraced again, back and forth price action here. From this point, from this high to this low, we had this busy here. It was redelivered sell side. It was redelivered. I mean, buy side, sell side, back and forth price action. Okay. So in my opinion, all of this range is balanced price range. Is balanced. So price takes out this low, I don't think it's taking out this low for liquidity. I think it's taking out this low to change the structure, to shift the structure. Basically, what I'm trying to say is we can expect bearishness in dollar now. Mm, I'm not marking anything on the day on the dollar index for now, but I have everything in mind. I mean, I'm going to watch the daily chart on my other monitor. I'm not marking anything right now, but I'm going to watch it. So let's go to the hourly. Clearly, it's bearish. So on the hourly, what I see is this mitigation block. Good one. I'm not going to mark it because I like things minimalist on the chart. I mean, as much as I can. There are things that you have to mark. But let's see. No inefficiency here. So the next drawn liquidity is obviously the sell side here. For me to feel bullish on the dollar index for short term, this fair value gap, it has to go above it and find support. Basically, I don't want this because I'm bearish on dollar, but for bullish scenario, this fair value gap is important. Okay, so with the bearish bias in dollar, let's go to ES and NQ. Okay, so what do we have here? We have this weekly CB outline delivered to the pit. Yep. Didn't I set an alert here? I don't know. Maybe I have not. Maybe I didn't. But we had this outline, I'm sure, in the previous sessions. I talked about it. Did I talk about this weekly CB in the previous session? Can you answer? Okay. Yes. Thank you. So even though the weekly CP has been touched the low of it, I want this high to get taken out because this is where a huge pool of liquidity is. It's recorded somewhere. Yeah, I'm sure if someone watches my recordings of these live streams on YouTube, they'll know about it. So yeah, with the bearish bias in dollar, the buy side here looks interesting. Buy side liquidity above this high, weekly high, because this is where a whole lot of buy stops are. We had a bearish bias for the whole of 2022, mostly. Lower high, lower low, lower high, lower low, lower high, lower low, and this high with this low, lower low. Large funds will have their buy stops above this high. This is where the trailed buy stops are, but huge pool of liquidity, huge. So I want it to be taken out. Let's go to the daily now. And with the bearish bias in dollar, this looks interesting. This looks achievable because the bias in dollar is bearish. So yes, and NQ ideally bullish. We have this BC here and I'm going to take this off now. This volume balance. This is from previous sessions. I'm going to take everything off. We have this buy side imbalance, sell side inefficiency, BC here. So I'll outline 3 points: the high of it, the low of it, and the consequent approachment of it. Just the high, the low, and the consequent approachment. There are other things that I'm watching on the daily as well, from this inversion fair value gap, but those levels are more or less aligning with this daily BC3 levels. So I'm not going to mark it because it will get clustered. Let's go to the hourly now. What were the levels that I was watching on the daily? I was talking about this, the high of the new week opening gap. It's the previous new week opening gap, but see the low of the daily BC here. It coincides with the high of previous week's new week opening gap. That's what I was watching with my cursor. Here. Smooth highs. These. They will get wrecked. Chat, uh, I want some feedback. Are you only watching me on my screen, what I'm sharing in this Zoom meeting, or are you looking at your charts as well? That's good. I see you're modifying what you have marked. That's good. You should not just look at the things that I'm watching, but also the things that you like. You see some TD that you're watching, you should also watch that. I'm watching my chart as well. So basically, my bias is bullish for ES and NQ. Uh, and I want these highs in ES to be taken out. So clean. This is my bias. Let's see what we get. I can see smooth relative equal lows taken out for sell side liquidity here. Let's go down to the 15 now. You have back and forth price action. So this is a balanced price range. The only inefficiency I see is here. But I don't see anything important in terms of an inefficiency. So we'll have to work with what we have. 15 minutes looks ugly, to be honest. Let's take a look at the Nasdaq as well. Weekly chart. We had this daily CB outline. We had this weekly CB outline in the previous sessions, the previous live streams. Both of them delivered when we were not present. I was not present actually. I was busy with other things, but our targets have been delivered. Weekly CB. Okay, okay, okay. Again, with the bearish dollar and extremely bullish Nasdaq, this looks interesting. Yeah, so we'll see. But this is the bias. Now, I'm not saying that this will be taken out this week, this day. I actually don't think it will be taken out this week. But long-term target is this buy side liquidity here. Are you in the continuous contract? Yes, I'm on the continuous contract right now. Say that again. Oh, I said my bias for ES and NQ is bullish, and these are the targets for NQ. Buy side liquidity, I don't think it will be taken out today itself or this week itself, but over the long term, I think this is the target, buy side liquidity. Let's go to the daily now. Mhm. Now I'm going to take off the weekly series because I don't need it anymore. We have this new week opening gap here that will be more prominent on the lower time frames. So mhm, the rejection block taken out. I don't like this. What I don't like, uh, preferably these lows should be taken out. Smooth equal lows, lots of stops here, sell stops. Let's see, let's see. Let's see what we get. Sorry, I'm a little slow today because, you know, takes time to get familiarized again after a long time. dollars are the consequent encroachment of wait, I'll have to show this. I mean, it's not important actually. It's not important, so let's forget. I'm not saying that it's going to find support at the consequent. I've said it, so it may confuse you, so I'll just show it. The daily chart, this consequent encroachment of this week. This is what I'm talking about. But I don't think that's important. So let's get back. Again, on the daily chart, NQ finding support. The body of NQ, daily candle, finding support with the new week opening gap, which is a volume imbalance on the daily chart, which looks like a volume imbalance on a daily chart. Again, the bias is bullish for equities and bearish for dollar. We have a small little inefficiency on the hourly chart of NASDAQ here that coincides with the new week opening gap of NASDAQ, previous new week opening gap. And this recording will be uploaded on YouTube after it's completed. So if you miss anything, you can rewatch it. We have this inefficiency here on the hourly chart. So we went to market. I'm not going to mark the consequent encroachment of it because I can eyeball that. It's a close range. This looks interesting on the lower time. This will look interesting on the lower time frames. Wait. There's no inefficiency here on the 15-minute, but hourly is the parent time frame, so we watch that. What I'm talking about. Relative equal highs, bearish order block. This bearish order block, 5-minute bearish order block. Above the relative equal highs. Buy side taken, bearish order block hit. Now we see if price wants to go for sell side. We watch how it delivers after hitting the bearish order block after taking buy side. We're watching. If it takes out consequent encroachment of this wick here, which also lines up with the consequent encroachment of the previous new week opening gap, this one highlighted here. That's price disrespecting premium arrays. So we're watching right now how price delivers after taking out buy side here, hitting the bearish order block here. I'm not going to outline the bearish order block because it looks ugly. It's too clustered. But we're watching how price delivers now. Nasdaq is obviously more bullish than ES. Didn't take out sell side, refused to take out sell side like ES. Now I'll put Nasdaq and ES side by side. I'm watching on the other monitor, ES and NQ side by side as well on the higher time frames, and this monitor will be for 5 minute to 1 minute as usual. I would advise you to, it's better if you have another screen that you can use to watch me and other screens for you to look at your own charts. But you're just watching price, okay? And right now it looks ugly, especially ES, ugly. This is what a trader's job is. Silently watching. 90% of the time, this is what you're going to do. Even actually 95% of the time, just watching. You see this is empty right here. Nasdaq is definitely the stronger one. PE on new wave opening gap on NQ. Yes, yes, we're watching that price. I don't have it uh, on the screen that you're watching, but here's the monitor. I'm looking at it. If it resists this Fibonacci gap, does not allow price to go higher for its high time frame objectives. If it resists price, sell side is next. Where is sell side? Here, below here, and this old liquidity pole on the hourly chart, if you can see. For bullishness to be confirmed, NQ should take out the new week opening gap high for bullishness to be confirmed. Yes, if it has to go higher, the hourly fair value gap should become an inversion fair value gap and support price if NQ has to go higher. That is our higher time frame analysis. TS and NQ both higher. That's intermarket analysis as well. Dollar is bearish. It should go higher. But for now, we're watching price because it's at new week opening gap and the hourly fair value gap. So we're watching. Patiently just observing. Like a like a tiger waits for a deer. NQ is definitely cleaner than ES. Mm. I don't see anything in ES. Yeah, we've taken on buy side. Yeah, sell side, but it's ugly, ugly, ugly. If you were just watching NQ on the 15-minute chart, this would have been of no value. I mean, it's a balanced price range on the 15-minute chart, yes, but the Ali makes it clear. Dollar is very bearish. We have a large range due to them. Dollar filled in a 15-minute fair value gap. So now if dollar moves lower, it can push equities higher. I like the high of the new week opening gap in Nasdaq. How about that? I'll have to. Sorry, I'm lazy. I use this indicator for new week opening gaps. 14,436 around. Yeah, this is it. Hmm, this is not good. That high is still achievable, but I don't like this price action. High is still achievable in Nasdaq, but I don't like this price action. Oh, what was the price action? Ugly, ugly, ugly. I mean, the higher time frames is good. It's beautiful, but look at the 1 minute chart right here. Big bull faced candles, then big bull faced retracements. Big candles, big retracements. It's not good. If the high is in the cards, in the books, price should take out consequent encroachment of the hourly fair value gap here. That will come around here, eyeballing it roughly. Take it out. It touched it roughly. Let's see. ES wants to go better than Nasdaq. Nasdaq is like, please don't push me higher. This is actually a very difficult day to read on the low time frames. You can clearly see. Dollar going for the sell side liquidity pool. It should go there with speed now. That means equity should rally as well. This purple. Go for it. Bam. Touch to the high of 1 after value gap. Go for it. I mean, if you were in a trade, this is how you would have partialed. Say you saw this market structure shift, early gap, long, had to wait a lot of time, this chop. First partial here, second partial is the consequent encroachment, third partial is the high, fourth partial is, I mean, partial out your positions. Dollar made an equal low with the sell side liquidity pool, the daily level, ram down below that. So that will push equities higher for the new week opening gap high in Nasdaq particularly. Sell side touched in dollar and ESNNQ are like resisting dollar. High resistance liquidity run in ESNNQ, low resistance liquidity run in dollar index. Now I want you to think about something here. When you tell me to classify the difference between a high resistance and a low resistance liquidity run, this is the difference. I said I want the high of the new week opening gap here when the market was here and it dipped here. And I know most of you were thinking, oh, it's going to reverse now. It's a market structure shift. If you were thinking here like that, please say so in the chat. if you were watching price here in this candle, I know you would have thought that I'm wrong, the market is shifting, bearish. And to be honest, for a second, the yeah, when this is a full bearish faced black candle here, for a second, the impulsive thought is in every trader's mind, oh, maybe I'm wrong, maybe the market is reversing. And that is the drawback of high resistance liquidity run. The drawn liquidity is here. These were the targets. These were the drawn liquidity. And if we were in a low resistance liquidity run, this this should have been this should never have this wouldn't have happened if we were in a low resistance liquidity run in equities. This spike right here, this is why I don't like to trade high resistance liquidity runs. Because you will make an impulsive decision that will be wrong. So stay out, just observe price. Maybe I could have been wrong. Maybe it would have been a market structure shift. But price action alone on a 1 minute chart, market structure shift alone on a 1 minute chart is not the answer. Price will give you a good market structure shift. Price will give you a good fair value gap, a good 20-22 model on the 1 minute chart, and you will enter and it will fail you. It will hit your stop loss. Because alone, on 1 minute chart alone is not the answer. Intermarket analysis, higher time frame analysis, time. This is the answer. Now dollar should take out this inside. It's difficult to read. It's retracing into the 5 minute fair value gap dollar. And ES and NQ are like, let's go. Now, if ES and NQ rips lower, if they do, if that's in card for them, I don't think it will be, what I mean to say, it will be a massive move lower without any retracement. If they do move lower, it will not give you a 2022 model here for shorting. It's a very difficult day to read, but you should sit in these days. Not to be impulsive, but just watch. Because if you don't sit, I mean, when you're experienced enough, you don't have to sit in these days. You can skip these days. But in the beginning, if you sit in these days, get you will, uh, appreciate the low resistance liquidity run. I wanted to rip higher here to the new week opening gap high, and dollar to go for the sell side liquidity. New week opening gap high will be delivered without us, but it will be. New week opening gap high delivered in Nasdaq. But are we dancing? No. Because you see how frustrating price action this is. But the concept is there. The drawn liquidity is there. A liquidity run is there. The difference is high resistance and low resistance. That's the difference. Even this chop, this deep retracement, still it delivered. But no, we're not going to be a part of it. So, my bias, I outlined all the higher time frame levels. I think this will be it for the stream today. My bias is bullish for equities, bearish for dollar. I don't like how we made a perfect equal low with the sell side. It will take it out. And this taking out of sell side in dollar will push equities higher. So yeah, this should be it for today. You're welcome. Every week, every day, and we don't stop. So thank you guys for watching. I'll see you another day. Goodbye.